Hello friends, hope you're doing well. Chris Lee, CPA here, back with another video for you. Today we're going to talk about when clothing is tax deductible. It's such a common question that comes up as, can I get a tax deduction for, clothing, and like if it's used for business, when and how does that tax deduction work? So the first thing to know is that clothing used for work or business is not deductible if it's suitable for everyday wear. This is the case even if the clothing was purchased solely for work and is not worn outside of work. So this could be business suits, skirts, dresses, other professional business attire, and likewise casual clothing such as khakis, plain white shirts, those are not deductible. Anything that's shoe related that's suitable for everyday wear is also, not going to be deductible. Watches are, never deductible, basically ever, unless it's, inventory for your business. If you, buy and sell watches as part of your business, you get the deductible expense for that watch as cost of goods sold, but it's never going to be deductible outside of kind of an inventory context. So when it comes to deductible clothing, the first thing to think about is uniforms. So uniforms that are not suitable for everyday wear are deductible, as a condition of employment. So this would be, airline pilots and airline service staff. They're required to wear uniforms and insignia, and its attire distinctively representative of their employment status with the airline, and generally not appropriate for everyday use. This, an interesting case here was baseball players. They are able to deduct the cost of their uniforms that are distinguished from athletic uniforms from general sportswear. So baseball players, they actually be able to, deduct their the cost of their team uniforms. So likewise, nurses that are required to wear certain uniforms that are unsuitable for streetwear also could deduct these items as uniforms. So protective equipment, so anything necessary to perform a job for safety, a job safely, is fully deductible. Thinking of it as like a required condition of employment. So electricians, can deduct safety shoes that protect against an electrical hazard. Long haul truck drivers, could be permitted to deduct insulated coveralls or steel-toed boots or safety glasses and gloves used for long freight runs in harsh weather conditions. So that's where you might see protective gear be tax deductible. You might see specialized apparel be deductible. So this is oftentimes industry specific or performance-based clothing that's not adaptable for general wear. So there's a case called the Crawford case where hospital employees were able to deduct scrubs that were not reasonably that cannot reasonably be worn off duty. Similarly, there's the Wilson case that has it is an example of a mechanic that was able to deduct the cost of the cost of his gray state overalls and the laundering of those overalls required for it. So this became tax deductible. So in the entertainment industry, stage performers that have outfits and costumes that are not suitable for daily use could claim those as deductible. When it comes to promotional clothing, so that can oftentimes be deducted as kind of like promotional or advertising expense when it is clearly marked with a logo. So this really needs to, this is kind of a distinctive thing. So I've literally seen content creators say, put the logo inside your suit jacket, hide it, and then now you've got the logo on there and it's a deductible business expense. That is not within the spirit of case law or legislation at this point. The logo needs to be clearly visible in order for it to be treated as deductible. So that's like one big thing that I see happen is that the logo, the people will talk about putting the logos inside their clothing to claim the tax deduction. That doesn't work. The logo needs to be clearly visible. And an important thing to know here is that even whenever you've got an item of clothing that falls into the category of tax deductible, you will find that laundry and dry cleaning of those items are also tax deductible. So you can keep track of those items and get a tax deduction for it. When it comes to independent contractors, they kind of fall into the same rules as it does for a business trying to deduct clothing. Independent contractors are functionally running their own business, and so they're able to deduct the ordinary and necessary apparel and business wear, the ordinary and necessary apparel for doing their line of work. Now, when it comes to employees, employees that maybe have a required uniform that they must purchase in order to as part of their employment status, there is no deduction. There is no personal deduction for those out-of-pocket expenses. In 2017, the Tax Cuts and Job Act eliminated the miscellaneous itemized deduction, which allowed for these tax deductions. And this provision was made permanent by the recent One Big Beautiful Bill Act that was passed in July of 2025. Now, what I will say is, even though the employee cannot personally deduct it, what can be done is the employer can set up an accountable plan that reimburses the employee for their out-of-pocket expense for a uniform or some other material required for safety of doing their job. And under the accountable plan, the business gets a deduction for the amount that they reimburse the employee, but the employee does not receive taxable wages on the other side. So for an accountable plan to work, it doesn't have to be a written policy. You just have to show consistent application. Even though that is the case, it's best to have a written policy. And the rules are pretty simple. So the reimbursed expense must be for business use, not for personal use. The employee must make adequate and timely accounting of those expenses. And then if there are excess payments, the employee needs to return that to the employer on a timely basis. So the business purpose is, again, the not suitable for everyday wear. It's pretty clear that it is it needs to be for business. If you want to avoid a reimbursement being characterized as wages, the reimbursement should ideally be paid with a separate check or direct deposit. So the adequate accounting rule, the employee must provide substantiation and documentation sufficient to enable the employer to identify the specific nature of the expense and conclude it is a bona fide business expense. As far as returning excess payments, any excess payments to the employee need to be paid within a reasonable amount of time, such as 120 days after the expense was paid. Within 120 days after the company provides the employee with a period payment, or some other practical time frame. So the IRS does not require that, again, the plan be written, but it is best that you do have an accountable plan written. The interesting thing about accountable plans is that they are not subject to the non-discrimination rules that you see under 401k plans or other ERISA qualified retirement plans. So that is to say, employers can actually discriminate among employees. Thus, an employer could decline to reimburse some employees for work clothing while reimbursing others. So that's kind of a unique rule. Now, payments to employees for work clothing that do not comply with the accountable plan rule are considered taxable wages to the employee and should be reported on the W-2. And that means there's also withholding taxes that would apply, and the employee's share of Social Security and Medicare taxes from those payments. So the employer does deduct the payments that do get counted as wages rather than reimbursements. So that's just a quick overview as we talk about how we deduct clothing. Most work clothing is not tax deductible, even if purchased exclusively for the job. And that is unless it is not suitable for everyday wear. So deductible items generally fall into narrow categories such as required uniforms, protective gear, specialized industry apparel, or clearly identifiable promotional clothing. So clothing like that qualifies, related cleaning and maintenance costs are also deductible. Again, to review, independent contractors qualify for work clothes that have qualifying work clothing expenses can still deduct them as a business fix, just the same way as any full business or that sort of thing would. And for employees, again, they cannot deduct work clothing on their personal tax returns, regardless of its suitability for everyday wear, due to miscellaneous itemized deductions being permanently eliminated under both the Tax Cuts and Jobs Act initiating the rule and OBA, the One Big Beautiful Bill Act, making that a permanent rule. So instead, employees should seek their employer for reimbursement under a countable plan, which allows the employer to deduct the costs while providing the reimbursement tax-free to the employee. So there's a kind of the quick nitty-gritty overview of deducting apparel. There's going to be a link down in the video description that if you want to have a direct consult, you're open to that. That'll be available at your disposal. And looking forward to chatting with you soon and another video for you in the future. Take care. Bye.